Okay, we are live.
Are we ready to go?
Yes, sir.
All right.
Well, good to see you, man.
Yeah, likewise.
It's been a long
It's been
time.
a lot of changes, a lot of things going on, but
What a crazy time. What's going on, everybody? Thank you guys for joining us live. We really are hoping a lot more of you are going to join us now because I know you guys are at home. I know you're working from home. I know the kids are doing school at home like my kids are. So I hope we get a lot more of you to engage and ask us questions. As always, guys, we're doing this to help you. We want to give you any and all information that we can so you can make better decisions for you and your family, whatever it may be. And like I wrote in the the little teaser for the post, yes, we're going to talk about buying and selling houses, about lending, about interest rates. But you know me, guys, I love to travel. This guy likes to travel. I love to eat. We love restaurants. Ask us anything. We're happy to help with anything that we can. But I think what we want to talk about more than anything right now.
it's hot right now. It's sizzling hot, right? I mean,
It's crazy.
both of us have been doing this. It's literally incredible what's been happening with all the uncertainty. You know, we're 2-3 months ago, we were talking about the market crashing. Remember,
Exactly.
like, oh man, all this, is everything going to be on hold? Is the market crashing? So now it's like completely the opposite. People are, thinking that we're going into a recession, we're going into a depression, and then now it's just the opposite.
And just to make sure you guys don't think that anybody was crazy for thinking that, it actually did go down. We had about a 2-week period when everything kind of stopped.
Yeah.
Then we did see some decrease in the number of transactions for about a month and a half or so. And then I think it was late May to mid-June, everything just freaking skyrocketed after that. And you guys know, if you follow me, you've seen some of my posts. We have multiple offers on almost every listing that hits the market. You have to pay over the asking price. I'm not going to go into it because you guys have heard me talk about it. Let's just talk about what is going on, why this is happening, and how we can help you, whether you're buying or selling, or maybe just refinancing. Just take advantage of these crazy rates. Because again, we just want to help you guys make better decisions with any information that we can give you. So let's start with that. Why is this happening?
Well, I think there's two low. So the inventory is just not there. So when something good comes up on the market, just multiple offers. People just can't get in because it's just too many buyers, and not enough supply. It's just simple economics of supply and demand, right? So whenever the supply is low, okay, prices are going to go up.
Yeah, and just to touch on that before we move on to your next point, he's absolutely right. So you guys know I do kind of a weekly update to let you know how the market is doing. The numbers that we had for May, we had, I think it was 14% less active listings than the month before that, which is a huge drop. And as far as days on the market, we've kind of been dabbling in about 2 to 2.5 months worth of inventory for a long time. Now, this was for May, so I can't wait to see what the June numbers look like. That was even less, so that was down to 1.5 months worth of inventory. And I've said this before, but it's such a huge portion of why this market is the way it is. Basically what that means, if you don't know what that means, if in a month and a half no other houses come on the market, everything would sell out. Like, there would be nothing left. That's how crazy this is, and that's what's driving up the prices.
Even houses, I'm seeing houses that have been on the market for 6-7 months from a long time ago are now selling. People that couldn't sell their houses are now selling. The houses that were, lack of a better term, garbage,
they're getting sold as well.
They're getting sold, right? So anything that's like halfway decent is just disappearing.
Yeah, and obviously the second part of that is these
interest rates, right? The interest rates, they play a big factor because one thing that people don't realize is that their interest rates really controls your purchasing power. The one thing I don't think people realize a lot of times is when we qualify somebody, we never qualify for a loan amount. We always qualify for a payment amount. Right. We just figure out, well, you qualify for $2,000. This should equal to about, we try to estimate taxes, insurance. So this should equal to a $300,000 house, for example, right? So we never qualify for a loan amount. It's always a payment amount. So right now the interest rates are all-time low. We used to talk about rates being, we haven't had rates since 2007, 2000 or 80 something, right? Right now, think about this. Since the history of mortgages, banks, whatever you want to call it, we're at an all-time low. Like, it's never ever been lower. So what's going on right now is that the fact that the rates being so low, it's increasing the purchasing power of the borrowers.
Yeah.
So let me give you an example. Let's just say you bought a house for $300,000 a year ago, right? Where rates were in the mid-4s, for example, right? Your payment on $300,000 would be exactly the same as for somebody that's buying a house today with the interest rate in the 2s, high 2s, mid 2s, right? At $375,000.
What?
So you have the same exact payment. So what's happening right now is a person that would qualify for a $300,000 house a year ago, today they would qualify for $375,000. So that's increasing their purchasing power, which is also causing the prices to go up. So that makes a huge difference.
Huge. I gotta jump in on that because that to me is crazy for, I think, at least 2 reasons. So, first of all, just think about that. $75,000 more in purchase price. Why is that so important right now? Because the prices have been going up, guys, for the last 2, 3, 4, 5 years. So it is almost impossible to find a decent, good home that you love in like the 250s. You gotta go 300, you gotta go 350 just to get the kind of home that you really love. And to be able to do that, $75,000 more purchase power, you finally can get the home that you really want. You don't have to settle simply because the interest rate is so much lower. Now, I'm going to get a good deal. Now, I cannot tell them that that's not going to happen. We're definitely probably going to see some short sales, some foreclosures once all this settles. Because there's people that have lost their jobs. We don't know how long it's going to take for them to get their jobs back. And there's going to be some people that probably will have to get rid of their homes, will have to downsize. The great thing is this is statistically proven. This is just a report that I read the other day. Almost, I think they said over 50% of all mortgages right now have equity in them, which is a big difference than what happened back in 2009.
Right.
So there's not going to be as many short sales, but there might be foreclosures of people that are just not able to pay the mortgage anymore because they don't have a job. But they still have equity, so they're still able to get them sold, and that's where you might see maybe a decrease in price. I still don't believe that we're going to see that in Arizona, and it's simply because of our lack of inventory. So if you guys wait for that, I just don't think it's going to happen. I could be wrong, and I hope I'm wrong. I hope some of you can get some good deals. But think about it this way. Let's just say I'm wrong. Let's say that you're right, and the prices will start to come down. But what if the interest rates go back?
And you bring up a very good point, because the theory that I just made earlier works in reverse also,
Exactly.
right? So that's exactly what we're talking about. If you have a house that's $375 today, and next year that house is $350, in your head you might think, well, I've won.
Yeah.
I did a great job by waiting. But if those rates start creeping up, you will technically have a higher rate on a house that's $350 than a house that you're buying today at $375.
A higher payment.
A higher payment, right? So in reality, what people don't realize is that terms sometimes are even more important than price.
Yes.
And a lot of times, it's the easiest way to compare things. It's always on price. When you buy a car, you buy a house, right? But one thing that people don't realize is that one of the best ways to win in finances is not price, it's terms.
Exactly.
Right? Terms are always important. I talk about this to a lot of my clients, because terms, sometimes you can take a house that's like $400,000, right? That's got so incredibly good terms, that house ends up being cheaper than a house that's $300,000 because the terms aren't right. And it could be, and we can talk about terms for a very long time here, because sometimes there's different kind of terms in different industries, right? But when it comes to mortgages, terms are extremely, extremely important. So price is not always the factor. And like, just to go back to your point there, as far as the market dropping, the fact that people have so much equity, you're not going to see a 2005, 2006,
Absolutely
because
not.
I think a lot of people are talking about, well, what happens if, I wait like 2006 and I wait till 3-4 years from now and I can get a house that's like 60 cents on a dollar.
That's not.
It's just not going to happen, because in 2005, I remember this myself. Every house, as soon as you had a little equity, right? Your house went up 20,000 equity, you tap right into it. So you're back at 100. Then your house went up another 20,000, you tap right into it. Right now, you can buy a house with a very low down payment. The only difference today is you cannot do a cash out refi at a high LTV. You can buy at a high LTV meaning loan to value, but you cannot cash out like you did in 2005. So once you start building equity, You can't tap into it. Not even the big banks. They aren't doing a home equity lines of credit at 95, 100%, right? They're just saying, okay, you bought it at 95 loan to value or sometimes 97, right? And then as that equity goes up, you're not tapping into it.
Right.
So because of that, if the market does turn around, these people aren't foreclosing because now everybody has equity.
And like I said, guys, the statistics, this was a nationwide statistics that over 50% of the mortgages that are out there have over $117,000 of equity in them. Okay, so that's really going to protect the real estate market from a crash. But I know some of you still believe what you believe and do what you have to do. We're not here to tell you to do otherwise. Our goal, guys, is to give you all the information that we know and what we expect to see based on statistics. I think we're both number-driven people. We look at the market, we look at the numbers, and we go based off of that. We're not going to go off emotions that people are feeling like they did back in 2006, 7, 8. It's just not happening, at least not in Arizona. It might happen in some markets around the country. We don't know. We just know Arizona. When you have such a lack of inventory, it is almost impossible for prices to go down. It's simple supply and demand. It's simple economics. Look it up if you don't believe us. I'm guessing with the elections, we might see a slowdown. It happens every 4 years. That's normal. But then it bounces back up, 4, 5, 6 months later. So what we're trying to tell you guys is look at all the numbers. Trust the experts, which we are at least semi-experts in what we do. This is what we do every day. And like I said, we love numbers. We love research. We look at all of the data that we can to give you this information. And the interest rate that you can get now, guys, it is better than any price drop that you're going to see anytime soon.
Absolutely.
Because like you said, it's almost it's a $75,000 purchase price power difference. Do you think the market's going to go and drop $75,000? Even if it does drop, I don't think it's going to drop that.
There's one more thing I want to add, though, Robert, because if you think the difference between 2005, 2006, and today, there's one huge factor. In 2005, everybody was into the mentality of buy and sell, meaning, hey, I'm going to buy today. I'm going to go put in $10,000, $5,000 earnest with a new builder. By the time it's done, I've got $50,000 in equity. I'm going to sell. So they always had this idea: I'm going to buy 6 months, I'm going to sell and make some money. Right now, today, the mentality, and most people I'm talking to, which is the right mentality, is they're doing a lot of buy and hold. Because their idea is if I can get a rate right now, in the 2s, right? And you can hold this property for the next 30 years, you're going to save a lot of money, right? So let's just say that the rates go up to 4%, 5%. Who knows what's going to happen in 5, 10 years, right? You're not going to want to sell that house because if you're moving out of it, you say, I've got a 2.5%, 3% interest rate. I'd rather rent that house for a long time instead of selling it where, I can make a little bit of profit. So the idea right now is most people are saying, hey, I'm going to do a buy and hold.
Rate,
it makes sense to do a buy and hold.
Especially the investors.
For a loan that's 30 years out there, right? As opposed to, rates were at 7%, 8% back then. So right now, the mentality is buy and hold as opposed to buy and flip.
Yeah. So I hope that makes sense to you guys. Again, we have nothing to gain from this. If you want to wait till next year and see what happens, do it. We're going to be here for you in 6 months, in a year, in 10 years. Doesn't matter when you're ready to do something. We just know from what we see that rates like these will probably not be around for a long time. We don't know. What do you think? Do you think that's going to stay?
It's gonna be hard to say. Every time we say can't be any lower.
That's true.
But here's the big difference now. Right now, the banks are borrowing money at 0%. So how much lower can you go?
Yeah.
You know what I mean? Where it used to be where the margins on what the banks borrow money at and then what they give us the rates at, sometimes it could be like 1%. They borrow from the government or 0.5%. Right now they're literally at 0%. So I don't see that going any lower than I mean, you can't go to a negative, but at the same time, depending on what happens with the election here, I think the only place it could go is up. I think it's a matter of not if, it's a matter of when. How long is this going to hold out?
Right.
And that's the question that I don't think any of us could answer. I mean, it could be a month. It could be after the elections.
Not even our politicians can answer that. They change their mind all the time.
Yeah, nobody really knows how long it's going to hold off. But, even if the market does tank, if the rates are good, okay, you're still going to come out way ahead. And I'm a numbers guys. I mean, people that know me well, for me, it's all math and numbers. So when you start breaking down these numbers and you realize the market would have to take a really, really big hit in order for you to gain if the rates go up.
Yeah.
Right? Like you'd have to have a 50%, maybe a 60 cents on a dollar type of cut.
Oh wow,
to
that's
really
huge.
come out of,
So that's
come
huge.
out of HUD. But
That's huge. Let me just make sure, see if we have any questions before we sign off here, but I just wanted to cover one other thing. Let me step around and make sure. Okay.
well, if anybody posts on the page there, we'd be more than happy to answer your questions. If you're looking to refinance, a lot of people are doing refinancing right now, especially if you're thinking about staying there long term. You're talking about a rate. He just refinanced, right? So if you're thinking about staying long term, definitely want to refinance.
Yeah, so quick story on that, because I think that's something that we should do an episode on maybe next time. I just refinanced with him, and it was so crazy, guys, what a big difference it makes to work with the right people, right? So we refinanced from a 5.25 down to a 3.25. But when he initially looked up all of the information that we were going to do, the rate that we were going to get was around 3.85. Okay, so then we talked and said, hey, what can we do to get that lower? Because obviously the rates out there are
Robert
much
called
lower.
me and said, hey man, there's rates out there that are much lower. What's going on?
Yeah.
But I
Hook your brother up.
Right, but I always tell you, Robert, I tell all my clients, there's so many factors that can control interest rate, right? There's so many things that control, and I literally just then I sent you the spreadsheet, and I said, here's what.
Yeah, but which is okay. That's not what I want you guys to understand. Is working with the right people. He then said, okay, well, let's look at what's happening and what can we do to lower this rate. So I said, okay, pay this off, pay this to this, pay this to that amount, and once we pay those things off, my score jumped from a 694 to like a 745. Which I'm not telling you guys that can happen to you. I don't know. Every situation is different. That crazy algorithm and the
how long
credit
did that take?
industry,
Like a week and a half, 2 weeks? Not even?
Yeah.
Like a week maybe? Yeah, it literally happened in like a week and a half. So
yeah, I had to do a lot of extra work, but it was worth it,
Absolutely.
right? You got to be on the phone with the credit card companies, get letters to show balances, do all that stuff. He gets those, then he does a rapid credit score. What I'm trying to tell you is there's ways that you can improve your situation if you work with the right people that will lead you to where you need to be. Okay, so by just doing that, that saved us, from a 3.85 interest rate down to a 3.25 interest rate, and I think that was a difference of like $110 per month. But what people don't see is the thing behind the scenes, that the savings on the interest itself over the long term is going to be much bigger than that. So there you go. That's something that if you guys have questions, just call him, comment below. If you have questions on buying, selling, vacations, I think we just booked a couple of vacations. He's going to, where are you going?
Alaska, yeah.
Yeah, we got a smoking deal to go to Mexico. Yes, I know we're crazy, but we're going to go. So anything that we can help you guys with, we got your back. Whatever you need, let us know, and we're happy to help. Anything else?
I think we covered a lot, so.
All right, cool. Well, hopefully we'll see you guys in a week or two, and bring us any questions you have, as always. Thanks so much for watching. Have a good day.
See you.
All right, man. Thank you.
See you.